Okay, let's dive in. We've got something pretty monumental to unpack today. Bitcoin. July 14th, 2025. It didn't just nudge past its old record. It absolutely smashed it, soaring past $123,000. A new all-time high.
Astonishing figure, really.
It really is.
Hmm.
And, it's a number that just grabs your attention, doesn't
Yeah.
it? It really changes the whole conversation around digital assets.
Absolutely.
So today, our mission here on the deep dive is to, well, cut through some of the noise, the hype, and really figure out what's truly driving this incredible surge. We've looked into the latest reports, and we're going to try and distill those key insights for you.
And what's really interesting, I think, is the timing. This wasn't just some random Tuesday.
Right.
It all happened smack bang in the middle of crypto week over in the US.
Ah, okay.
And if you sort of connect the dots there with the wider market context, you start to see this powerful mix of factors all coming together.
A confluence, yeah.
Exactly. Creating almost the perfect storm for Bitcoin's climb. We're digging into more than just the price tag here. It's about the mechanics underneath.
Okay, so definitely not random. And the reports we've seen seem to highlight two really big forces at play here. First up, let's talk about the institutions. The sheer weight of institutional money flowing in. Can you walk us through those numbers and maybe more importantly, what they actually mean?
Yeah, absolutely. I mean, the scale of institutional adoption right now is, well, it's something else.
Okay.
Just look at the spot Bitcoin ETFs. They pulled in over $2 billion in new money on just 2 days, July 10th and 11th.
$2 billion in 2 days.
In 2 days, yeah. And to give you a sense of scale, BlackRock's IBIT ETF, one of the big ones,
Right.
it's now managing an incredible $80 billion in assets.
Wow. $80 billion.
Yeah. So this isn't just, everyday folks getting excited. This is serious traditional finance stepping into the ring.
Yeah, and you mentioned spots Bitcoin ETFs there. That distinction matters.
Yeah. Oh, definitely. It's key because unlike the older futures-based funds, these spot ETFs actually hold real Bitcoin.
Okay.
That creates a much more direct link between traditional finance and the actual digital asset. It strips away some of the counterparty risks you get with futures, and it provides this regulated, direct way to invest that, frankly, a lot of the big institutions needed before they'd even touch this asset class.
Those figures are just staggering. It really does feel like a shift. But, we've seen waves of institutional interest before, haven't we? It kind of comes and goes. What feels different this time? Is this more, I don't know, permanent? Like a real endorsement from Wall Street, maybe?
That's a really good question. And you're right, past interest could sometimes feel a bit speculative, maybe a bit cautious.
Yeah.
But I think what we're seeing now feels more like a fundamental rethink. Institutions seem to be looking at Bitcoin as a legitimate, long-term part of the financial landscape.
The real asset class.
Exactly. The sheer volume of money, the consistency of the inflows, especially into products from these, established financial giants.
Like BlackRock.
Like BlackRock, it suggests a growing belief, a conviction that Bitcoin isn't going away and actually has a role to play in, say, diversified investment portfolios.
So less about a quick gamble, more about integration.
Precisely. Integration into their existing frameworks.
Okay, so the financial floodgates are opening.
Right.
But that's not the whole picture, is it? You mentioned Crypto Week.
Right.
This surge happened right alongside some pretty significant moves on the legislative front, too. Let's shift focus there. What was happening in the U.S. during Crypto Week? How did that feed into this?
Yeah, so Crypto Week in the U.S., it's often a time when policymakers focus on digital assets. Industry folks are in D.C.
Right, a focal point.
Exactly. And during this period, the U.S. House of Representatives was actively debating some really crucial pieces of legislation. The big one getting attention was the Genius Act.
The Genius Act, okay.
Now, this act covers a few things, like putting stricter rules on stablecoins, demanding proper reserve audits. But crucially, it also aims to create clear legal definitions for different types of crypto assets, figuring out what's a security, what isn't.
The big classification question.
The big one. And getting that kind of legislative clarity is huge for investor confidence.
How so?
Well, it just makes the whole environment more predictable, safer, really, for both the big institutions and individual investors. It starts to remove some of that legal gray area, that uncertainty that's honestly held back wider adoption for a long time.
So the Genius Act is trying to draw some clear lines in the sand, define these assets. And for those of you watching the regulatory space, the fact that this is moving through the House relatively quickly, That suggests maybe a more proactive stance from Washington now.
It certainly seems that way. Less reactive, more forward-looking, perhaps.
Yeah. Now, clarity sounds good, generally welcomed, I imagine. But could there be any, I don't know, downsides for the crypto world with these kinds of regulations? Or is it mostly just paving the way for more people, more institutions to get involved?
It's always a bit of a balancing act, isn't it?
Yeah.
You'll always find some in the crypto space who'd prefer, minimal rules. But the overall feeling, certainly among the larger players and institutions, is that a clear, well-thought-out regulatory framework is actually essential.
Essential for growth.
Essential for scaling up, yeah,
Yeah.
for attracting that really significant capital that's been sitting on the sidelines. It kind of helps transform the perception from a, Wild West scenario into something more like a recognized financial frontier.
Okay.
So yeah, I'd say it mostly paves the way for broader, more confident adoption.
Okay, so let's just crystallize this. Pull it all together. Bitcoin's incredible leap past $123,000. It really seems to be fueled by this powerful combination of factors. Yeah. You've got the undeniable pull of institutional money flowing in, making Bitcoin more legitimate for mainstream investors. We see that clearly with the $2 billion pouring into spot Bitcoin ETFs in just days, and BlackRock's IBIT hitting that massive $80 billion mark.
Huge numbers.
Huge. And then complementing that, you have this crucial groundwork being laid on the regulatory side with things like the Genius Act, potentially bringing much-needed clarity during Crypto Week.
The two working together.
Exactly. And it's reshaping the whole crypto landscape, isn't it? The total market cap hitting, what, $3.8 trillion now?
Yeah, right. $3.8 trillion.
It's just enormous. So whether you're someone tracking financial markets or you're interested in new tech, or maybe you just want to stay informed about the global economy, understanding these shifts, both the market moves and the legislative ones, it feels absolutely vital right now.
Absolutely. And, if you take a step back and think about the bigger picture, with this kind of serious institutional buy-in happening alongside potentially real regulatory clarity finally taking shape and driving that total crypto market cap up to $3.8 trillion, it does make you wonder, doesn't it?
Wonder what?
Well, what kind of fundamental shifts might this signal for the future of finance itself? How could this start to reshape, maybe even redefine the traditional investment world as we know it?
That's a big question.
It is definitely something to mull over. How does this level of adoption and regulation change the game long term?